What's up, everyone? It's Scotty with Money Investing. If you guys can see me and hear me, just give me a thumbs up. We should be all set. I just want to make sure the audio and the video is working well. And yeah, a live stream after a couple days of breaks because I was traveling and just was not able to find a good time to go live. So thank you so much for joining. Good morning, good morning. Welcome on board, and we are ready to go. We've got the yields just nonstop, nonstop. The 10-year yields are just absolutely going crazy here with 4.3% is where we are for the 10-year yields. In fact, we hit a high of 4.335%, and this is, I think, the 13th week where we are seeing just the yields consistently pushing higher. So obviously, that's putting a lot of pressure on equities. Without a doubt, we've seen the Nasdaq sell off or pretty much stay stable. Lots of indecision the last couple of days, but right now pre-market down a little bit over 1%. We got the SPY down over 67 basis points, and the Dow also dropping over 67 basis points as well. And yes, Snapchat not doing too well. The last time I checked, it was down 26%. Right now, it's down, wow, close to 30%. This is a brutal, brutal sell-off here for Snapchat. I think we're hitting a new low. Actually, no, we're not. During the pandemic, during December of 2019, it actually came down to as low as $5. So yeah, I take that back. We're not hitting a new low. We're very much still above the all-time low, but of course we're definitely getting down to an all-time the 52-week lows for Snapchat. So brutal result. In other words, brutal reaction from the markets. The result not necessarily as bad, but it was obviously the guidance for the average revenue per user, single mid-digit growth here on a year-over-year basis for revenues. So a lot of things obviously didn't work out for Snapchat right now. So today we've got earnings from Verizon, American Express, and Schlumberger. So all of them have already, I think, reported for the most part because we've got about 30 minutes left till market opens, and I'm pretty sure that they have already reported numbers. But of course, Snapchat would yesterday. AT&T, American Express, Tesla, IBM, Lam Research, Alcoa, all these companies have already reported numbers. Did a video on Netflix. I did a video on Tesla. I'm gonna do a video on Snapchat as well, and then I'll do a video on ASML as well. I did a video on Lam Research as well. So we have covered like three so far, and I'll do a video on ASML and some of the other companies, Snapchat as well, that have reported numbers, and then maybe even American Express because I do want to take a look at American Express as well in the context of how Visa and MasterCard have done. So that's kind of like the wrap here. And again, the 10-year yields have risen for 11 consecutive weeks. I think it's now 12 or close to 13 consecutive weeks. The 10-year yields have just consistently been pushing higher, putting a lot of pressure on overall equities. The spreads between the 10-year and everything is negative except for the 1 month, the 3 month, and the 2 month. The 3 month was also negative, but right now it's just pushing right back up. So, all right, audio, video, good. Screen share, good. Perfect. No Meta. Caddy, are you going to add Meta shares? So, yeah, I don't want to over allocate myself on Meta, but yes, my plans are to eventually add a lot of shares for Meta. Of course, their numbers are coming up next week, so this is going to be very, very important for the market. So, obviously. And I do expect some good numbers. Maybe not on the DAUs or MAU side. Maybe that might start to kind of plateau finally, and we start to see a little bit of stabilization there. But again, the ad spend has been down. I mean, that's not something that we don't know, right? It's a fact. Advertising spending has been coming down, and if you take a look at our advertising watch list, these are 7 to 8 stocks that are all just absolutely getting sold off here on the day because of Snapchat. So Meta down 4%. We got Digital Turbine down 3.7%. Pinterest is down 8%. Amazon is down 1%. Google is down close to 2%. Twitter down 4.5%. Roku's down 2.6%. PubMatic's down 3%. And then Trade Desk also down almost 6%. So advertising spend obviously is coming down in 2022, and it will be lower in my opinion in 2023 as well, just considering that we are entering a recession in the US. So this is a big headwind for this sector, big headwind for this space. But it's not going to go on forever. It's not like ad budgets are going to continue to get cut indefinitely. Once the economy starts to kind of stabilize a little bit and we start to kind of get towards the tail end of this recovery, then I do expect a lot of these names to do a lot better in terms of the earnings, the revenues, and the cash flows. But it's just going through this tough time, this temporary period of recession fears, and of course higher interest rates, which is cutting all these budgets down. Um, all right. Good morning, everyone. Good morning. Good morning. Siren says, I see the haircut. Nice. All right, yeah, so it's been a while, right? So since we went live, so I'm happy to go live here again, kind of share, what my thoughts are on the markets. If you have any questions on any stocks, just let me know, and I'm happy to kind of analyze that for you. Apple here down 28 basis points. We got AMD down about 1%. Tesla obviously has been on a consistent sell-off here ever since they reported numbers, down over 6% yesterday, down 0.7% today, down to $205, and we got Nvidia also selling off down over 1%. So, good morning, everyone. Thank you so much for joining. And yes, make sure that you also do vote for our poll that we have going on. So, again, what you think about the markets, let us know in the poll, whether it's going to be a red day, green day, or flat day. Just the usual, doing that all over again. And let's take a look at LABU. Amazon reports earnings, I believe, next week. So we'll take a look at that as well. Before the numbers come out, I'll see if I can do a video on them. But LABU here right now, this is going to be a resistance roughly in the 720s, 750 levels. I'm actually going to be closing out my covered call on LABU. That's already up close to 60%. So that is something that I will be doing either later today or next week. But really, I mean, with the LABU, it's a very high risk, high reward play. It's a leverage play. I mean, it moves really, really aggressively. Right? It goes up and down like insanely fast because of the leverage factor. And really, it's all about being able to trade this and obviously not invest in this long term because of the decay. So you'll notice that it actually absolutely went crazy, 222% rally here from lows of about 420 all the way up to $13. I trimmed a lot of it in the 13s. In our Discord, so definitely didn't want to hold the shares for too long because of the insane rally that we saw, and XBI also getting up to a big resistance here in the $97 range. And since then, we have seen nothing but a little bit of a pullback here for XBI, for biotech. So 19-20% drop, which is again very normal in this market environment. So it really depends on XBI where biotech trades, and that's gonna obviously that's going to be really important for LABU, right? Because that's a leverage ETF. So Fernanda says, you had too much to drink last night, Caddy, because different voice today than normal. No, I feel like it's the altitude too. Like Colorado altitude is just insane. I don't know what it is, but it's just, like my lips have been dry. I've just had to drink a lot of water. It's crazy. Like Colorado, it's different, It's not as, I would say, comfortable as like being in New York or Boston. But yeah, I'm surrounded by mountains in Colorado. I'm sure people who have been here know what I'm talking about. But no, it's I need to get some water. I just literally woke up like 30 minutes ago. Han says, "It's the pot." No, I don't smoke. All right, let's see. Netflix, let's take a look. All right, let's take a look at Netflix here. So Netflix, we talked about this, in our market update. So 1.5% down day yesterday. We're pretty much up to that 200 simple moving average, right? So that is going to be that level to watch for Netflix. So we haven't really traded above that 200 SMA in since January of 22. So that's a really important moving average to pay attention to for any stock. Doesn't necessarily mean Netflix, but for any stock, any index, ETF, the 200 SMA is a very, very important level for any company or any stock. So right now we're just getting tagged at that level. So like after they reported numbers, we went up a little bit over 13%, got rejected there, and yesterday also we got up to as much as 278. And then got rejected as there as well. So we got two gaps to fill for Netflix, one on the downside, one on the upside. The downside gap is right after the recent earnings, and the upside gap is from the previous earnings, from the last couple earnings. So in my opinion, I do think that we're going to see a bit of a pullback here for Netflix. Wouldn't be surprised if it does come down to the 250s, fills this gap right here, and then starts to make another attempt to break above that 200 SMA, and then rallies back higher. Matthias, hi bro, what is going on with the 10-year yield? We climbed over 4.3% this morning. Will there be a bond crash? Well, really, I mean, it all comes down to liquidity, right? That's what's going to be the main driving force here. With the 10-year yield going higher the way it is, 4.2, 4.3%, there's going to be a liquidity crisis. I mean, the cost of borrowing is going to get more and more expensive. Mortgage rates are going to probably be in the double digits next year. And then, loans on rates on auto loans, rates on credit cards, rates on everything, like all type of consumer credit, and even business loans, commercial loans, like all those things are just going to be much, much higher. So you will see like this broad-based freeze in spending. Like if yields continue to go higher, it's just that's how it works. And if the interest rates from the Federal Reserve also keeps pushing higher, we heard from Patrick yesterday, the Fed chairman, the Philadelphia Fed chairman, and he mentioned that rates still need to go much higher. They're going to probably be at 4.5, closer to 5% in the future, and he said that they're going to be staying there for a long time. So they're going to be restrictive for much longer. And if that is a scenario that we are going towards, then you have to accept the fact that there is going to be a liquidity crisis. There is going to be fight for liquidity, and that just leads to overall less spending, less earnings. That will help on the inflation picture. That's what everyone's trying to tackle here. Like the only reason why rates are going up is to tackle inflation. And inflation will only come down if there's either supply matching demand or demand matching supply. And the goal for the Fed is to really match the demand back down to supply. And the only way they do that is by choking it, by literally just like not giving people the money to spend. Almost exactly the opposite of what they did all of last couple of years. So that if that happens, obviously that's not great for stocks in the short term. But there's also a scenario in the medium term where we see inflation rotate back down, the economy into a recession, unemployment goes higher, and then the Fed actually starts to stop cutting rates, and then eventually starts cutting rates as well. Stop raising rates and then starts cutting rates. So that scenario is going to be actually very bullish for stocks. And all of this, in my opinion, is actually kind of brewing for a very strong like bull market in the future. It's going to happen, in my opinion. It's just going to be a little bit of time. We're going to have to be very patient with what's going on over the next 3 to 6 months, possibly even 12 months, just depending on how severe this recession ends up being. But there's no doubt in my mind that there is going to be a recession in 23. Absolutely none at all. Because all the signals, all the leading indicators that I'm paying attention to are all pointing to a recession in 23. So, Michelle, are you DCA yet in this environment? So, not necessarily. Just, I've been pretty much not been buying a lot over the last, I would say, 3 to 6 months. Really been raising cash and increasing cash exposure to kind of prepare for better opportunities, and just been nibbling in a little bit here and there, but haven't really been aggressively buying stocks. At the same time, I've also been selling put options and selling covered calls. So just been trading options for the most part. I think majority of my trading has been in options this year as opposed to just straight up buying stocks, only because of the environment and of course the volatility that there is in the markets right now. Um, why are markets randomly becoming green? Really, I mean, the markets, like I said, there was a study done historically, and there's no reason, there's absolutely no catalyst needed for the markets to turn green, the markets to rally. So there's a lot of technical factors, but if you take a look at the 10-year yield, you'll notice that at around 905, we saw a big dump here, in the 10-year yields down about close to 1%, and then at 905, we're also seeing the big jump here in SPY and QQQs as well. It could be related to the yields. Yeah, QQQ greens. There we go. Now we got the poll flipping probably. 68% people were expecting red at the beginning of this live stream. And we'll see if this poll flips. By the way, make sure that you also drop a like here. I really appreciate it. And also vote if you haven't already. But yeah, just you got to be careful in this environment. There's going to be a lot of fake rallies, not a lot of bull traps, a lot of bear traps, a lot of intraday movements, intraday volatility here in the market. So we just got to be really, really careful and make that distinction between what's a technical rally and what's a sustainable recovery. And we haven't seen a sustainable recovery in like months, right? All of 2022, none of that's actually happened or taken place. So, Marshall says, yes, you are a mile high, 5,280 feet above sea level. Is that what? Are you serious? Marshall? No, that can't be right. Colorado's what? That's an insane altitude, man. Like, I didn't know it was that high. What? That makes a lot of sense. Uh, it's now finally starting to kind of lighten up a little bit. It was like pitch dark until half an hour ago. Um, so Apple here moving up, still down 0.13% though. We got AMD also kind of recovering a little bit, but only down about 0.8%. Tesla still down 1%. And then we've also got Nvidia here down about 1%, but now starting to push right back up. Do you use a mouse for the laptop? I don't. I don't. So dollar index 113.20. We have seen, so dollar index also kind of fell off a little bit in the 5-minute chart. You'll notice 855, 905. So we did see a little bit of pullback here in the dollar and the bond yields. And then of course we saw the equities move back higher a little bit. Let's see if we have anything on the economics calendar. I don't think we do, especially not at 9 a.m. That'd be very unusual if you had anything at 9 a.m. Oh, John Williams speaking. So maybe he said something that might have moved the markets, but that's only what I have on the economics calendar. Yesterday, of course, we heard from Patrick Harker, which he actually did mention, by the way, Patrick Harker, that there is going to be a time when the Fed is going to stop raising rates. That's about as direct of a response as we can get from any Fed chair. Or any Fed president, right? Any the central bank's president. So he pretty much said, okay, we're going to stop raising rates at some point in the future, but we're going to keep them at restricted levels. Right now at 9 a.m., we have John Williams talking. So, maybe he said something that's moving the yields lower, moving the dollar down, and markets back higher. But look what's happening. The yields once again back higher. They're up 2%, 1.26% for this 5-minute candle. The dollar index also rotating back higher, and the market's also just struggling at the moment and coming right back down. Let's see. So, hi Caddy, where can I see your Excel sheet for intrinsic values? It's not in the description. So yeah, it's not in the description. It's actually in our Patreon and our Discord. So there's a link in our Discord where you can go to. And that will get you to that intrinsic value spreadsheet. So we've on our Discord, there's a channel that we have created specifically for Google Sheets. You'll see that's the name of the channel, Google Sheets, or I think it's Google Spreadsheets, whatever it is. So it's Google Sheets, and you'll go over there. There's 4 sheets that we share. One of them is the intrinsic values and the fair values, and you click on that, and that'll take you to the spreadsheet that's online, that's available for viewing. And I update those, and I will be updating those as more and more earnings come out. So we will be updating those numbers on a more regular basis. So Matthias, what happens when there is a panic sell-off in the bond market? Would stocks crash? Well, if there's a panic sell-off in the bond market, that means prices are coming down, yields are going lower, yields are going higher because again they move in inverse direction to each other. So yeah, I mean, if yields go higher, there's going to put additional pressure on equities. And, it all this is actually what's moving the market. So, we talked about this in our yesterday's video. This is a very, very important chart. This is probably the most important chart that, I think we need to pay attention to. And what this shows us, again, if you did get a chance to watch the video from yesterday, if not, make sure that you do that. I've also posted a more dedicated analysis on S&P 500's fair value in our Patreon, so it's a more private member-only video if you want to access that as well. But what this dot plot really shows is at different yields, what different multiples stocks should be trading at, S&P 500 as a whole. And I think this is going back almost 100 years. And right now we're at 4%, almost at 5% now. So we're in this 4 to 5% range at the moment. Let me just see if I can zoom out a little bit. So yeah, we're at 4 to 5% range. If you go across, the multiples are going to have to be somewhere between 15 and 20. 15 and 20 is kind of like appropriate. In some cases, we've seen even multiples as high as 45 and even 30 or 25. But I think majority of that is going to be between 15 and 20. So again, if you kind of take a look at over here, between 4 and 5%, this is where most of the dots are scattered, right? Between 15 and 20. Now, if rates go higher, let's say if they go up to 6 to 7%, right? We're still pretty much in that 15 to 20 level. So we have some flexibility. Again, this is all based on historical statistical data, based on different rates where the multiples have traded at. Now, if they go beyond 7%, that's when the problems actually begin. If you go up to 8, 9%, then we're looking at less than 15, closer to 10. Lots of times the S&P 500 actually traded around 10 multiples at 8, 9% yields. And then of course, if you go up to like anything above 10%, anything like double digits, like that's going to be a real issue, like a real serious problem for the economy and the markets, because multiples are going to compress down under 10 and the cost of borrowings is going to be insane. Like at 11, 12% yields, the mortgage rate's probably going to be like in the high teens or like low 20s, and that would be insane. That would just absolutely be insane for the economy. So really, I mean, yields are what actually are driving a majority of the market moves that we're seeing. I think there's a few more charts that I wanted to share here, and then and this right here is another one, right? So this is from 1984. Every tightening cycle, what we have seen is the market bottom right when the 10-year yield has peaked, right? So every time the 10-year yield peaked, it was just a few weeks after the market bottom. And this happened in 1984, and this was way before the Fed even stopped raising rates. I mean, the rate hikes didn't stop until October of 1984. The markets already were on their way higher in July or August. And that's when the 10-year yields also kind of started to peak out at 14%, right? That's a pretty insane number, 14%. And what's happening now is this, right? Yields are going higher. So we're now well over 4.3%. The market's going lower, and the Fed interest rates are also going higher. That's the red line. The red line is the Fed funds rate. The green line is the actual yield, and the blue line is the actual market. So if this is something very similar to the 1980s, the great inflation of 1980s, and then of course previous tightening cycles that we also learned about from that report was 1990s, 2018 to 2016. All these previous times, this exact trend has followed, where the 10-year yield has been the one to watch. If that blinks, if that peaks, and if that starts rolling over, that's a good thing for the market. But if it doesn't, well, we're just gonna have to be patient. We're just gonna have to be really, really patient with the markets. So something to think about, obviously. Mil says, I learned bond yields from Caddy. Thanks. Yeah, I appreciate it. Glad you were able to learn, and I'm happy to help. Would you buy Snap at these prices, Nima? I've actually not done a video on Snap. I've done a video on Snaps a couple times, but in terms of our intrinsic value, the company is not profitable, right? So it's hard for me to analyze, a company that doesn't have profitability and have any visibility into what the future might look like for Snapchat. So won't be able to put an intrinsic value on it, unfortunately. I can put it from a price to sales perspective, but that also doesn't take into account the share dilution aspect of it. It doesn't take into account the free cash flows, the earnings. Simply is a most basic price to sales discount method that you can use to understand that, okay, what could be the market cap for the company 5 years from now? But it's also a very vague sort of estimation of the market cap, right? A more detailed analysis could be looking at the earnings projections or looking at free cash flows, so discounting free cash flows, and then some of the other, like if the company were paying dividends or dividend growth models and stuff like that. But for Snapchat, unfortunately, we don't have anything to analyze except for the sales. So I don't have an intrinsic value there. Ray says, great video on Lam Research, very informative. Yeah, so Lam Research, I do think is very attractive at these levels, right? So LRCX, I always mess up the ticker symbol for Lam Research, but up to 8%, almost 8% yesterday, coming down to its 300 simple moving average. bouncing off of those levels very, very nicely. And we did a video 3 months ago when the stock was trading well over $400, I think 420, 430, and we were waiting for like 25 to 30% drop here for Lam Research, and the fact that it did, and they also reported some good numbers, definitely in my opinion represents a further look into this company. The interesting thing is that it's not just Lam Research. All semiconductor stocks, so like if you come over to our semi watch list, so semis, all semi stocks are down 40-50% on a year-to-date basis, right? So if you come over to Broadcom, down 35% year-to-date, Qualcomm down over 38% year-to-date, TSMC down over 48%, we got Intel down 49%, Texas Instruments down 18%. This is the only one that's kind of holding up a little bit better. AMD, Nvidia, we already know, 40-50%. On semiconductors, also holding up much better, only down 10%. Micron, 42%. Applied Materials is next. So this is a company that I will be analyzing next. Down 50%. And then Lam Research as well. So it's not just Lam Research specific. It's across the board with this industry. And that's also one of the reasons why I'm also looking at SOXL. This is one that I really want to potentially get into eventually. And I will be looking at either cash good puts or leaps or something on this to take advantage of the upside that this represents. I think this represents significant upside, but it's just making sure that, okay, you don't get caught on the wrong side of the trade, considering it's leveraged, there's volatility decay, and there's potentially, a lot to lose with leveraged ETFs. So there's high risk, high reward. All right, let's see here. Yeah, Kevin says, why buy Snap when Google is 100? Exactly. And there's better opportunities, in my opinion, than Snapchat right now. Vic Viking says, come on, Fed, do a 125 point increase. That would be brutal. That would be catching the markets way off guard. And I just, can't even imagine how much the markets would be down. Scotty, what's your take on volatility today? Markets jumping like crazy, pre-market jumping, dollar slumps, what's going on? Well, that's 2022, really. I mean, at this point in time, and after like 10 months of what we have seen, all this volatility really shouldn't come as a surprise. All this intraday moves really shouldn't come as a surprise. This is nothing new in 2022. Like, we've seen much worse in all of 2022. Like, I think people can agree that 2022 has probably been one of the most volatile years. So many swings, so much back and forth. So it really shouldn't come as a surprise, what we're seeing. It's just the nature of the market. And it's just a lot about anticipating for the markets at this point when the interest rates will stop going up, when the 10-year yields will peak, when the dollar index will start rolling over, and then when all those things happen, man, it's go, go, go. It's go time, So May Market says, most tech stocks have a lot of debt. Which tech stocks are you talking about? Because most tech stocks that we've analyzed on the channel, yes, they have debt, but they have a lot more cash than debt. Let's see. So, all right, NIO, let's take a look here very quickly before we kind of set up for market open here. Let's see, NIO down 2.5%. Wow, so really getting destroyed right now at the moment. So this right here was a little bit of a support for NIO, but obviously getting rejected at those levels. So we'll go ahead and turn this level back into a rejection or resistance there. And the next level really is going to be exactly where it's trading right now, like 10.50s, $10. So this is going to be that level in line with this previous resistance here. So we got rejected there in March 2019, and this was also a little bit of support for NIO. So you'll notice that we're kind of trading back and forth here for NIO before finally pushing higher. So that is going to be that level to watch for NIO. Yeah, lots of Chinese stocks is absolutely getting destroyed, down 54% here already from recent highs. Alibaba is down to $71, so it actually hit a new 52-week low yesterday. XPeng, I know that also has been just straight up down to new lows. 751. So well plays, thank you so much for that donation. I really appreciate it. What are my thoughts on Alibaba? In the short term, it's tough because there's a lot of issues going on in China. You know, that's one of the reasons why Chinese stocks have really been selling off again, and this has been all of the last couple of years. Well, fundamentally, I can say that if you were to isolate Alibaba by itself, you know, it's one of the most undervalued companies we've seen in a long time, and pretty much ever. You know, trading at very, very low multiples and earnings, and you know, cash flow multiples. But there's an additional component to it: the technicals and the macroeconomic, the geopolitical tensions, and everything that Alibaba has to face from a regulatory standpoint. So those things continue to restrain investment sentiment towards this stock, right? It's just not that great. It's the situation with Chinese stocks is just not that great, unfortunately. So yeah, with Alibaba, you know, I'd pay attention to like this 52-week low around $70 per share. And if you do see a little bit of a rally, I mean, the high watermark here on Alibaba could be $81, $82. You know, this is a resistance level to pay attention to, but really the technicals are so weak that it could still continue to go lower highs and lower lows. So Nishant, I've actually done a video on TSMC before, so you can check that out. I've actually done a complete full analysis on TSMC. We've talked about the intrinsic value. We've talked about everything. So that should help you get some good context into the company. If you simply go on YouTube, type in money vesting TSMC analysis, you should see it. All right. I have done analysis on TSMC. Yeah, TSMC definitely has come down to very attractive levels. Even if you take a look at our fair values on our Google spreadsheet, it is one of the few names that is actually trading at undervalued levels. All right, so we are ready to go. Yes, if this survived this bear market and lots of volatility, it brings we'll survive everything in the future. That's right. I mean, that's what I've mentioned before as well. That we're all getting a very, very good experience of the markets, and of course learning at the same time. And you know, markets will have obviously no certain environment is comparable to what we have seen in the past, because every time we go into a recession, every time we go into a bear market, it's new, right? It's fresh. It's happening because of new reasons. Sure, there can be some similarities drawn between previous times. Like today is very similar to the great inflation of 1970s and 1980s, but a lot of things are different. Of course, we've got different policy, different fiscal monetary policy, different debt levels, and of course, different market dynamics in terms of how it's constructed. So there's a lot of differences there. But yeah, I do agree that this is definitely going to be very helpful long term. All right, off we go, folks. We got the Dow Jones here, flat open. NASDAQ is opening down 61 basis points. And then we got the S&P opening down about 19-20 basis points. We got NVIDIA pushing through slightly, but still down 0.61%. We got Tesla here down 1%. We got AMD down 1.4%. And we got Apple also just flat. So it's a pretty red open. A little bit of a gap down. Of course, a lot of stocks here selling off, such as Meta and Google because of Snapchat. Freaking Snapchat. Every single time. 3 for 3. They shouldn't be allowed to report earnings. They just shouldn't be allowed to report earnings. Every time they report, man, they take down the market with them. It's crazy. 27% down for Snap, and then of course you got Twitter down 5%, Cloudflare down 2.5%, Roku down 3%. It's mostly red. A lot of it is red. The ones that are green, Moderna seems to be pushing higher here very well. Kevin says, what what earnings? Yeah, they just the report, the revenue report is what we should call it, because they have no earnings. Lucas says Fed pivot in May. Who knows? Who knows, man? David, are you worried about the upcoming Meta and Google earnings? Well, not necessarily worried, because I am prepared for I know that they're not going to be great. Advertising spend has been really down. this year, of course, because of all the budget cuts and marketing expenses getting shot, and then there's also recession fears, so consumer spending is coming down. So it really depends how you're positioned. Like if you are expecting them to report great numbers, then you will be disappointed. If you are expecting them to report some okay-ish numbers, then you'll be fine. I don't think they're going to be brutal. I think they're going to be just okay, like nothing to write home about, you know? I think Google might do a little bit better than Meta, just because Google still has a lot of dominance in search, and YouTube, of course, is just an animal. And then Meta, obviously, there's some issues going on internally as well. Caddy, overall, right now, how many CSPs you've sold? How many sell to open positions do you have at this moment? Just curious. Oof, I gotta take a look, man. I can't even. I think I know that I have one on Tesla. I have a couple on AMD, one on Nvidia. I sold another one on Google. I might have another one on Amazon. I have to check. Yeah, if I were to give you a number, it's more than 5, but it's less than 10. To just to be on the safe side, I think that's kind of like appropriate. But again, I might have to like go back and look. But most of the stocks that I've sold cash good puts on Tesla, AMD, Nvidia, Google, Amazon. So those are the 5 that I've definitely sold. Not Amazon, not confirmed, but those are the ones that I've sold puts on. Amazon, I might have to confirm. Maybe I had a cover call on it. I can't remember. Fundstrat now saying Powell will start lowering rates in 2023. Oscar says. So Oscar, do I even need to guess who from Fundstrat said that? Who from Fundstrat exactly said that the Fed is going to start cutting rates? Can anybody guess? So Speedware, what are your thoughts on opening a QQQ straddle going into earnings and FOMC? So interesting question. Really depends on a lot of factors. What's going to be your upside and downside break-even points? Like what percentage are you looking at for the NASDAQ to kind of break above or break down below? And then earnings, it's I think that's a good catalyst for lots of market volatility. FOMC will be, but it really depends, right? So if you're thinking about till the FOMC, you're probably looking at expirations that are like November 4th, right? November 4th, that's 14 days out. All right, November 4th. So weird. We will always struggles right at the open to show me the bid and the ask. Yeah, it takes time to load, but if you're doing your analysis, just the one thing that you need to make sure is what that upside and downside break-evens are, and what that percentage upside move or downside move is that you need for that straddle to work out, to kind of for the stock, for the underlying to break above or downside, about outside of its range is pretty much what I'm saying. So, because I was actually looking at Snapchat straddle, I mentioned it in our Discord, and then the upside downside was 17%. Like we needed Snapchat to move 17% up or down in order for that straddle to work, and it pretty much went down 27%. So a lot more, but obviously 17% at the time did seem like a lot, and all right, so let's see. Tommy Boy, yeah, Tom Lee, definitely. That's Tom Lee. So Richard says, what do you think about Elon Musk laying off 75% of Twitter's staff? Deepak, Caddy, please explain it. Explain what? Deepak, did you have a question? All right, so non-index of common inflation expectations, 5-10 year, 3.1%, 12 non-index of common. Yeah, if you, I might have to take a look at that, but yeah, I can barely read it. Non-index of common inflation and expectations, 5-10 years, Q3, 3.1%, and 12 non-index of common inflation expectation, 10-year, 2.2. So really what that means is this inflation expectations over a 5-10 year period, right? That's what it's showing us. And expectations are still pretty anchored at low inflation over the longer term. Yes, we're seeing high inflation right now, But expectations is what really, it's kind of like a self-fulfilling prophecy, right? Expectations is what actually drives actual inflation. If inflation expectations go up, inflation will go up. If inflation expectations go down, inflation will go down, right? Because again, people start thinking that, oh, if inflation is going to be high, if prices are going to be higher, let me just do all my buying today so that I don't have to pay higher prices later. And as more and more people start doing that, people start buying today, that actually leads to higher prices, right? And it's the same thing, but if people start expecting prices are going to be lower in the future, they wait. They're like, oh, why buy today if prices are going to be lower in the future? And then more and more people start doing that, nobody buys, and then prices eventually come down. So it's a self-fulfilling prophecy. Expectations and handling those expectations are very important. And that's what the Fed and Jerome Powell has also mentioned time and time again, that we got to really make sure that the inflation expectations don't get entrenched in the economy at high levels. And that's really what needs to be anchored at around 2 to 3% long term. So Elon Musk laying off 75% of Twitter staff. Obviously he can do whatever he wants. He will own the company eventually. But I know that he's got lots of plans with Twitter. And he also mentioned it in the earnings call that, Twitter has a lot of potential, and, the value of Twitter could be several magnitudes higher than where it is today. So obviously I know that even if he does lay off 75% of the Twitter staff, he's going to replace that with, other people who are more capable, or he seems that are fit for the job pretty much. So Sam, Boston Beer going up. Let's take a look. So 8.6, almost 9%. So they reported earnings yesterday. Miss on EPS, beat on revenue. And Sam and Boston Beer is one of those companies that will get affected by inflationary pressures in supply chain. And that's pretty apparent in the overall revenues and the earnings estimates. Numbers actually. So revenue beat. So revenue is still doing really well, but because of that inflationary pressures, margins got compressed and they reported lower earnings. So this is one company that's absolutely been hammered down so much since like November, actually April of 2021. It's down a little bit over 73-74%, and year to date down 27%. Year to date, this stock is actually not doing as bad as a NASDAQ, which is pretty crazy to think about, considering that this has also been down 70%, but year to date, not as bad. Kevin says, because we're all drinking more. Yeah, that's probably possible considering how the markets have traded in all of 2022. But yeah, we've got that 200 SMA. We haven't really traded above that level since June of 21 in over a year. And right now, Sam seems to be kind of trying to break above that level. And not to mention the valuation is low. I wouldn't say it's like too low, but true 2 times sales, a little bit under 27 times cash flow, and then under 4 times book value and 67 times enterprise value EBITDA, which is definitely very, very high for Sam. Road to financial freedom. Is there any economic data today? No, I don't think there's any economic data due for a couple of weeks now. There's just going to be some Fed presidents talking, different Fed presidents talking. So today we had John Williams speak, and then yesterday we had Patrick Harker. So yeah, that's pretty much it. Then we had jobless claims, initial claims that come out every Thursday, housing starts, permits, industrial production. But the most important things such as unemployment, inflation, GDP, of course the Fed, interest rates, all those things are not due for another 2 weeks, 3 weeks. So I think earnings are what's really going to matter for the markets. That's what's driving us at the moment. All right, let's run through the watch list here. What do we got? Netflix up 1.4%, so pushing up to 272. We got Meta down 3%, AMD down actually almost down 3% as well. Nvidia down 1.7%, Google's down 1%, Microsoft, Apple also selling off. Tesla slightly higher. And then we got Moderna, Novavax, Twilio. Then we got Crocs here pushing higher, Applied Materials, Walgreens is higher, but there's obviously a lot more red than there is green. Upstart's down 5%, Unity Software is down 6.3%. Peloton's down 4%, Digital Turbine down 3.5%, Roku's down almost 5%, and then Snapchat obviously down over 29%, with the Nasdaq down half, S&P down 27, and the Dow down 15 basis points as well. AMD getting schlacked here. Yeah, AMD definitely getting absolutely beaten down 3%, 3.5%, under $56. So we're going to end the poll here. Let's see where we sit. 64% expecting the markets to be red, 26% green. So pretty fitting to what we have seen. Also, guys, make sure that you drop a like if you haven't already. Just one single tap of a button. It really helps out the channel in a very significant way. So Green Mike, Green Mike. I love the name. Oh my god. Oh, I love it. We finally have somebody who's calling themselves Green Mike. No, I will be doing YouTube Shorts once again. And you know, when there's economic reports, when there's also a lot of big data coming out, that's usually when we do have a lot of viewers during the morning live streams. But on regular live streams, I think we've been averaging around 500, 600 views, which is great. I mean, you know, obviously it's a very well engaged community, and I love it. Appreciate you all talking and kind of helping each other out. Yes, ASML I have looked at. I have actually done a video on ASML as well. We'll be looking at their earnings very soon to kind of do some more analysis. But yes, I do like ASML very much. I think it's a very it's a very nice company, like in terms of revenues, profitability, earnings, margins, everything just absolutely is incredible for ASML. I think they're based out of Netherlands. So yeah, this is a company that's definitely on my watch list. Mike says my real name is Mike Green. Perfect. When you are meeting with us or any of our community members, just introduce yourself as Green Mike instead of Mike Green. Ashraf, all semiconductors are in fair value. Well, not necessarily. AMD is, in my opinion. Lam Research is, in my opinion. Nvidia is not. Nvidia still needs to come down low 100s for it to make sense, in my opinion. Nima says USA is the best country. Someone's definitely feeling a little patriotic. But no, I will be doing more YouTube Shorts here very soon. Just been, again, a little occupied. I think it's the editing. Editing takes a lot when it comes to shorts and vertical videos because you've got less time. So you got more information to kind of get across. And you do that by visuals and stuff and you're adding graphics. So that definitely takes a lot of time in editing. Like it'll take me like 2 minutes to record a YouTube short, but it'll take me like 2 hours to edit. So, you know, the difference there is huge. Andrew Caddy, what is your fair price of NIO? So NIO, again, they don't have earnings, so we don't necessarily have a fair value on them yet. And from a price to sales perspective, sure, we can make a case for NIO, but again, it's not going to take into account the share dilution, the actual earnings, or the free cash flow. So once NIO starts to turn the corner, then we'll be able to take a look at that company and apply our methodology to understand what that intrinsic value is going to be. Let's take a look at AT&T here. So AT&T with a very strong beat on revenue and EPS. So two beats, and the stock obviously pushing higher 2.3% yesterday. It was very strong, up over 7.7% for AT&T. And AT&T had its best day since 2020 after beating estimates on both ends, sending shares popping 8% Thursday. The wireless company reported EPS 68 cents, revenue 30 billion, which was down from 31.1 billion same time last year, but still beat. And the company the stock has been in doldrums since cutting its cash flow outlook 3 months ago. And the company also posted another quarter of sizable subscriber gains at a time when competitors reporting declines, boasting 708,000 postpaid phone net additions, and AT&T generated $3.8 billion in free cash flow. AT&T has come down to some very, very insane levels. Like, it was trading at $14, $15 a few days ago. This is the same level from, I believe, like 2015, 2016. So right here, 2015 was the last time it was actually trading at those levels. Well, obviously it's traded at those levels before too, like 2018, 2019. But if you think about it, like in like 6, 7 years, AT&T is back to the same price where it was, 8 years ago. So definitely it hasn't moved much, but it was a very strong dividend payer until they actually cut their dividend a little bit. But valuation wise, incredibly, incredibly cheap. Like this is just one of the cheapest stocks out there. But cheap doesn't necessarily mean undervalued, right? It's a big difference. Stock can be cheap, but the company may still be overvalued or may still not be undervalued. And the stock price can be expensive, but the company can still be undervalued, right? So there's a big difference there. And the reason why we do see sometimes companies trade at low valuations is because of very, very low growth expected. So yeah, if you're into dividend or income investing, AT&T still remains, in my opinion, a very strong player. Yeah, AT&T does have a lot of debt. The balance sheet's not super great. Fair value on Baba in the spreadsheet in money investing? No, I don't. I think maybe I don't. I'll update that, Mason, for you later. Wait, Jonas says there's no audio. There's no audio. I hope the audio is working well. Okay, good. Jonas, maybe it's muted on your end. If you want to unmute, maybe see if that works. Perfect. So the 10-year yield is rotating down. That's good. That's helping the markets a little bit. So again, we got up to as much as 4.336%. We're kind of rotating back down, and the market's also sensing that and pushing back higher. Lots of stocks kind of recovering a little bit, but Tesla's still down to 205. You got AMD still down to $56. Snapchat's now down 30%. Dewey says this wish Caddy would share his screen. I am sharing my screen. I made sure this time, man. That Tesla video really pissed me off so much. Like I spent 20 minutes talking, thinking that I'm sharing my screen. I had all the charts and the graphs and the spreadsheets, and then when I went back to kind of watch to make sure everything's good, literally it was just me the whole time. You guys can see anything. I was like literally talking numbers, and there was nothing on the screen, just me. Man, I was like, oh, gotta do it again. Dude says it was fun to watch you lose your shit. It was mostly because of the time, I've already got limited time and I want to at least get things done. And then when I waste 20 minutes and then I have to re-record everything, oh man, that's my biggest pet peeve, is like wasting time. Anand here, let's see your question. Sorry if I missed it. Say hi to me, you're ignoring me. Oh, hi Anand. Hi. I thought you had a question there. So Caddy, imagine Tesla 199. Are you buying? So Tesla now is in a situation, is in a position where, look, the multiples have come down dramatically, right? I mean, they're still not as low as where they're going to be, but if it comes down in the, I would say again, there's no right or wrong answer. There's no no number set in stone, because everything changes with the growth rates and the earnings multiple. So there is a range with Tesla that I have a good sense of where I want to be dollar cost averaging. So 183 is going to be that next support below 207. Right now we're already kind of getting rejected at that level, because as numbers get bigger and bigger, Tesla's growth rate will slow down, right? And the earnings multiple will come down. It's not going to be like, think about what's happened in the last 2 years. In the last 2 years, Tesla's price to earnings multiple has gone from 1,000 down to 55, right? 1,000 to 55 in 2 years. In the next 2 years, or in the next 3 years, I can confidently say that Tesla is not going to be trading at 55 times earnings. It's actually going to come down to closer to like 25 to 30. I think that's going to be the appropriate multiple for Tesla long term. And again, it's as numbers get bigger, multiples compress, growth rates also come down. And Tesla is getting bigger. Tesla is, in terms of revenues and earnings and profitability, cash flows, it's getting bigger and bigger. So based on the assumptions that I've made, based on the math that I have at 30% growth rate and a 25 PE multiple, we get a fair value of close to 170s, right? 170s, 180s. And at that level, in my opinion, it'll be a no-brainer for Tesla. Like if you're getting Tesla at 25 times multiple, man, that would be a steal in my view. Can it go lower? Sure, it can go lower. I mean, sentiment's what's going to be driving the stock in the short term. It can definitely go lower if more people are bearish on the stock, if there's, overall recession and, consumer demand starts to slow down. Sure, the markets can overshoot on the downside, but think about what we're saying here is a 30% growth for Tesla. That is like cakewalk for Tesla, at least in my opinion. People might disagree, people might agree, people might say, oh, it's 50%, but 30% is so conservative. And a 25 times P multiple? Come on. Come on. Yeah, John Collar says Amazon still trades at over 50 PE, but Amazon's not focused on earnings. They've already mentioned, like, for the last 20 years, if you look at what their investments have been and where they're focused on, even Jeff Bezos mentioned in the shareholder meeting that we're not going to be catering to short-term profits for Wall Street. And it's now that Andy Jassy has kind of put a stop to it, like, okay, we're cutting costs, we're going to be focusing on earnings. So you will see as earnings go up, multiples will come down. So even Amazon, I can make a case that, look, 2 years, 3 years from now, Amazon's price earnings multiple will also come down in the 20s, mid 20s, low 20s, high 20s. It's going to be in the 20s as Andy Jassy kind of now starts to focus on profitability. But for the last 20 years, they were just not focused. And if Tesla were the same way, if Tesla didn't care about profitability, all they really cared about was revenue growth and more vehicle deliveries and production and reinvesting everything back into the business, sure, the growth rate would have been astronomical, but the P multiple would still be much, much higher. It would have been like, in the hundreds. So, So Ken asks, is this my first bear market experience? If we get in a recession, say for 2 years, how the markets act during that period? Is that mean the market will move just one side only? So great question. So what really matters? So again, markets are forward looking, right? The markets are not going to be focused on what's going on in the present or the past, but the markets really care about what's going to happen in the future. So if say that there's a recession in the US next year, on average, a recession does last about 10 to 12 months, right? So on average, about a year, maybe a year and a half. But if there's a recession, the market's gonna then start anticipating what? This is a pop quiz. This is a question that everyone should have answers to right now. If there's a recession, what is the next thing the market's gonna start anticipating, or start trying to predict? What will the market look forward to at that point? Pivot, exactly. The pivot from the Fed, right? When will interest rates stop increasing and when will they start going down? Yeah, Kevin says earnings. Obviously, the market cares about earnings, but in a recession, the market's going to start anticipating when there is going to be a rate cut. Okay? Because that's what the Federal Reserve has when it controls monetary policy, right? Interest rates. And in recessionary times, the expectation is the Federal Reserve will cut interest rates. By the way, monetary policy and interest rates was never meant to support the economy during times of recession. It was only meant to control inflation. That's all it was. So even if there was a recession and there were low inflation, the Fed was not supposed to ever cut rates. But it's like, modern monetary policy where they've started to kind of control recession as well. Sure, in the dual mandate, they've also got unemployment. So that kind of makes sense, where they need to cut rates to kind of control the unemployment and make sure that the jobs market and the labor market is pretty stable. But if there's a recession, the only problem is that if there's a recession and unemployment is not high, well, then I guess you won't even be calling it a recession if unemployment is not high from NBER. So National Bureau of Economic Research, the officials on calling a recession, they only do that when unemployment is much higher and economic growth has really deteriorated to negative numbers. So then yes, the market will be anticipating a pivot when the interest rates will finally turn the corner. We won't be going higher anymore. We'll stabilize and we'll start coming down. And that's going to be bullish for the market. That's actually going to be bullish, even though we're going to be in recession. And I know it sounds pretty crazy for the markets to rally during times of recession, but again, the market's not cared about where we are or where we were. It cares about where we're going. And if interest rates come down, eventually spending will increase, unemployment will get better. Kevin says we are in recession now. I agree, but it's not official yet. Unemployment's not higher yet, and the Fed's not making any pivots until unemployment gets out of control. Because that's the only one thing that's being cited by the administration, by the Fed officials, by pretty much everybody that you hear in favor of raising rates. They've said unemployment. It's at a 50-year low, jobs market tight, labor market's very tight, wages are growing, people are employed, we're going to raise rates. The economy can handle it. That's the only thing they're citing. So if that's the last card that they can draw on, if that goes away, then they have nothing to back up their rate hikes with. If unemployment starts going higher, well, then they have to pivot. Swapnil, yes. So the earnings schedule for next week is going to be in our Discord. So if you go over to our Discord, you go over to our Google spreadsheets, there is going to be one that's called Economic Earnings Calendar. I've already posted the month for October, and you can go there. You can see that for yourself for October earnings calendar. It'll show you all the earnings that are coming up next week. So simply just go to our Discord, Google spreadsheets, earnings calendar. I think it just says monthly calendar. Click on that, and that'll take you to our October calendar. So market seems to be pushing through here. There seems to be a lot of buyers stepping in as the yields are rotating back down. So again, you see that inverse correlation between the yields and the market kind of play through live as yields have dropped over 2% here since around 8:20 a.m. We've seen the markets kind of rally very, very nicely. So we'll see what happens later today. Today, again, we're done with the earnings. I'm starting to kind of lose track of days here. I feel like yesterday I was thinking like, oh, I think it's Tuesday, but it was Thursday. Today I'm thinking like it's more like Thursday, but it's Friday. So today's the last day of the week. Just realize it. But Venkat says, Caddy, thanks for sharing all your knowledge. Happy that you are on YouTube and Discord. Happy learning with you, man. Thanks. I appreciate that very much. The big boys have earnings next week. Yes, Kevin. Big companies, big tech. That's going to be moving the market. So thanks everyone for joining. I really appreciate it. Let me see if I can show you a little bit of Colorado here. It's just morning time. So here, let me just switch my camera. I'll end the live stream with some good Colorado mountains right here. Let me see if you guys can see it. Pretty cool, right? So anyway, thank you so much for joining. I really appreciate it. As always, happy investing. Make sure that you drop a like, subscribe, and also check out the links down in the description below if you want to join, of course, be a part of our money investing community. As always, happy investing, and I'll see you all in the next live stream.